Inflation and high interest rates are having a big impact on many of us, including American homeowners. Many have put their plans to buy a new home on hold.
Rob Cook, Vice President of Discover Home Loans, joins us today to share insights from a recent Discover survey of U.S. homeowners, top trends in the U.S. housing market, and home loan financing options to navigate economic uncertainty.
Great. Thanks for having me. I lead marketing and analytics for Discover Home Loans. We're the nation's largest provider of home equity loans. And one thing we do every year, which we're super excited about, is do a survey of 1,500 American homeowners to see how today's economic environment is impacting their finances and decisions whether to buy a new home or renovate their existing one. And what we found with that is that in terms of the home buying process has been greatly impacted by the current interest rate. In fact, 84% of people that were in the market for a home have said that interest rates are having a profound impact, and about half those people are no longer in the housing market. And when we asked them again, like, well, how far would rates need to come down for them to re-enter the market? And they told us an overwhelming majority, 2/3, said rates would need to come down to 5% or lower before they would enter the market. The next questions we asked these people were in terms of how was the dual impact of sort of higher inflation and higher interest rates impacting their finances. And so we're seeing people make necessary changes to their discretionary spending. About 50% have reduced their discretionary spending. But we're also seeing a lot of activity in terms of how they're managing their debt obligations. And one of the things that people are doing in today's environment is getting their financial house in order by taking a debt consolidation loan, which is taking a new loan, but using the proceeds of that loan to pay off their existing debt, many of which in cases is variable rate and is the payments are increasing in today's environment. And one great option for doing a debt consolidation loan is a home equity loan, which allows people to access the equity they have available in their home without impacting the rate they have on their primary mortgage. It also allows people to get a rate which is lower than other financial alternatives they may have, such as credit cards. And also some providers, such as Discover Home Loans, you can get a home equity loan with no cash due at closing and zero origination fees. The other category we asked people was about home renovations. We're seeing a lot of demand there. About 55% of people would rather stay in their home and do a home renovation versus do a move or stay in their house as is. And in order to manage that, I would really encourage people to put aside additional money because costs might be higher than what you anticipated previously because of inflation. And secondly, as you think about financing options, I would encourage people to take options that don't impact the primary rate they're paying on their mortgage, such as a home equity loan can be a great option for those people. So to get more information, I encourage people to go to discoverhomeloans.com. We have lots of articles and tips to provide people understanding what loan options are available to them, as well as calculators to help them determine how much money they could save with a debt consolidation.